Welcome to the Tuesday edition of the Tech Stocks Daily Podcast, where we break down the day's electrifying events straight from Silicon Valley to Wall Street. Today, brace yourself for big news as Getty Images and Shutterstock team up in a billion-dollar merger poised to transform the content creation landscape. Plus, we're putting Apple under the microscope after a surprise stock downgrade. What's next for the tech giant amid AI challenges and geopolitical tensions? Dive into MicroStrategy's high-stakes crypto dance, dissecting the wild Bitcoin-driven stock sell-off. And don't miss Microsoft's mega investment in India, a move to supercharge global AI infrastructure and innovation. Stay tuned as we decode these thrilling tech tales and what they mean for your portfolio. Ladies and gents, tech enthusiasts and shutterbugs unite, because today's news is all about a power move in the visual content arena. Getty Images and Shutterstock are throwing in the towel on competition for a picture-perfect partnership. That's right, they're shaking on it to merge into a visual content behemoth expected to take the industry by storm with an enterprise value around a whopping $3.7 billion. So what happened? Getty Images and Shutterstock have announced a merger of equals, promising to deliver a larger, more diverse content library, spark fresh opportunities for their contributor communities, and double down on inclusive and representative content in this dynamic, image-hungry world. With demands for visual content rocketing across all industries, there's just no better time for these two giants to consolidate their capabilities. Now, how's it going to happen? The merger comes with several sweet options for Shutterstock shareholders. They can choose one of three: a solid $28.85 in cash per share, a swanky bundle of 13.67 Getty Images shares per Shutterstock share, or don't start drooling yet, chew on this mixed consideration: 9.17 Getty shares plus $9.50 in cash per Shutterstock share. Whatever your taste, they've got you covered. But wait, there's more. The deal expects to ring in substantial synergies, tuning up savings from $150 million to $200 million in general administrative expenses and capital expenditures within 3 years post-settlement. And about 2/3 of this financial magic will pop up within the first couple years. Who doesn't love some fiscal finesse? Once this behind-the-scenes hustle wraps up, Craig Peters, the current head honcho at Getty, takes up the CEO reins of the newly minted company, while Mark Getty steps up as chairman of the board. The balance will shake out to a 54.7% slice of the combination pie for existing Getty shareholders, with Shutterstock stakeholders snug at 45.3%. Financially, they're cruising to rack up nearly $2 billion in 2024 revenue, with a charm offensive comprising subscription streams making up 46% of the dough. Before outfitting these expected savings, EBITDA figures are pegged between $569 million and $574 million, translating to some sweet cash flow improvements. Now, of course, it's not all smooth sailing just yet. Regulatory approvals and blessings from both sets of shareholders are still on the to-do list. But given the potential to consolidate assets, expand market footprints, and drive innovation, it seems like a win-win transactional treaty that could redefine and reshape the content creation landscape. So, for the next big surprise on how we discover, create, and consume visual content, keep your lenses laser-focused on the combined might of Getty and Shutterstock. It will be like Spielberg and Scorsese announced a joint film. You definitely don't want to miss this historic merge sector twist. Hey tech enthusiasts, let's dive straight into today's sizzling headline featuring none other than Apple, a company that's always got everyone talking. So grab your AirPods, because this is juicy. First off, Apple's share price is on a roller coaster today, as MoffettNathanson's Craig Moffett dropped a bit of a bombshell by downgrading the stock from neutral to sell. Ouch. The main concerns: Apple's upcoming iPhone 16 models loaded with AI features seem to be struggling to catch the wave of consumer interest. Mix that with geopolitical tensions between the US and China, and it's easy to see why investors might be sweating. Speaking of tensions, Apple's usual ally, Alphabet, is caught in an antitrust whirlwind. With a $20 billion deal to make Google the default search engine on iPhones under threat, Apple's uneasy about losing that hefty paycheck. And if that wasn't all, recent data is a touch disturbing. In China, Apple's market share has dipped to 15.6%, while Huawei is flexing with a 42% surge. Clearly, it's not all golden for Apple, despite offering discounts galore to tempt more customers. Meanwhile, on the flip side, Apple's keeping a stiff upper lip with its News app, which is thriving against the current of turbulent media waters. With around 125 million monthly users across top markets, Apple News is like the gatekeeper of iPhone users' daily reads. The success is murmuring rumbles among media publishers, some seeing Apple as the Robin Hood of readership, while others, not so much. They're more on the Apple stole our lunch train. More interested readers mean a digital renaissance for publishers who get it right, and who knows, an added revenue stream. In other late-breaking accounts, Apple's AI is under the spotlight after the BBC flagged inaccuracies in its auto-generated summaries, most notably a mix-up involving some high-stakes dramatic stories that never happened. Well, even machines can have an off day, right? The kicker: the BBC's reporting led to Apple promising a revamp to ensure facts stay, well, factual. To top it off, in Apple's long-form analysis this week, some key metrics came to light. Their financials say they're undervalued in some areas when pitted against competitors, but who needs sleep when your revenue growth needs an energy drink? And yet, amid it all, positivity peeks through. Analysts are still eyeing Apple's future like it's the last iPhone on Black Friday, full of promise and profit. So, as Apple navigates AI missteps and global turf wars, it still stands with its glass half full, striving for that golden era, where tech like AI and virtual reality propel them even further into stratospheric growth. What's your take? Is Apple charming its way into the next-gen tech, or making a detour to reality bites? Let's hear your thoughts down below. MicroStrategy made quite a splash in the news today, largely due to its volatile stock performance and strategic moves in the cryptocurrency arena. First up, MicroStrategy stock saw significant sell-offs, tanking nearly 11% at one point during the trading day. This decline coincided with a broader market pullback, as the S&P 500 and the NASDAQ composite both took a hit. But the real culprit behind MicroStrategy's nosedive was Bitcoin. The cryptocurrency, to which MicroStrategy is heavily tied, started its own decline, losing about 5% in value. And when Bitcoin sneezes, MicroStrategy catches a cold, largely because the company has repositioned itself into something of a Bitcoin proxy with its extensive crypto holdings. Just to put things into context, MicroStrategy has been on a relentless Bitcoin buying spree. Recently, they added another $101 million worth to their portfolio, marking a bold statement of faith in the cryptocurrency. But risky business it is. The fluctuations in Bitcoin inevitably reflect onto MicroStrategy's stock performance. Today's selling pressure was further fueled by a report indicating job openings are on the rise in the U.S. According to the Bureau of Labor Statistics, November saw 8.1 million job openings, beyond what analysts predicted, suggesting an economy that's running hotter than a fresh cup of espresso. This adds pressure for interest rates to stay up, curbing risk appetite and causing declines in speculative stocks, Bitcoin included. MicroStrategy's shenanigans didn't just end at stock prices falling. It also found itself entangled in the world of high-stakes options trading. Market observers noted a surge in bearish options activity around MicroStrategy as big money whales placed hefty bets between the $100 and $450 price range. A mix of puts and calls fluttered in the market, revealing a split sentiment but leaning slightly bearish. This big shift in options trading hints that some heavyweight investors might have an inkling about more waves in MicroStrategy's near future. Parallel to the tumultuous stock and options activity, MicroStrategy also caught eyes with a strategic move. Notably, analyst Mark Palmer from Benchmark reiterated a bullish $650 price target for the company, indicating a possible 71% upside. Palmer believes that MicroStrategy's ambitions to raise $2 billion through preferred stock offerings could attract institutions like insurance companies and banks, the kind of investors who appreciate predictable dividends akin to a nice, safe harbor. So with a stormy mix of Bitcoin volatility, strategic financial maneuvers, and analyst optimism, MicroStrategy remains front and center in the tech financial narrative. It underscores the intricate juggling act MicroStrategy's leadership performs, with stakes in Bitcoin, options markets, and traditional financing, all battling it out like an epic tech stock saga. Today, Microsoft is strutting its tech stuff on the global stage with some major moves and a dash of industry intrigue. First up, we have Microsoft channeling its inner philanthropist and Futurama enthusiast with a whopping $3 billion injection into India's AI and cloud infrastructure. That's right, CEO Satya Nadella has unpacked Bill's big bucks to fuel an ambitious project targeting India's AI future. With a game plan extending over the next 2 years, Microsoft is setting the stage to develop new data centers and train a mind-boggling 10 million Indians with AI skills by 2030. Think of it as the AI Olympics, and India is the favorite to take home the gold. The initiative aligns seamlessly with India's ambition to fast-track its journey to develop nation status by 2047. Moreover, in a swoon-worthy productivity twist, Microsoft wants to boost AI adoption across India by fostering collaborations with startups, researchers, and academic champions. Their partnership with SAS Boomi is already slated to impact 5,000 startups and help train over 10,000 entrepreneurs. Not to brag, but they've already exceeded their target of training over 2 million people through their Advantage India program. With diversity stats that would make any organization green with envy, 65% women and coverage across Tier 2 and 3 cities. Additionally, while Microsoft flexes its muscles in India, we're taking an in-depth look at their standing in the big tech coliseum through some serious analysis of their financial metrics and market positioning. Comparisons, they've got plenty. An undervalued price-to-earnings and price-to-book ratio spells potential, even if it whispers overvalued in some realms due to its price-to-sales trends. But where Microsoft really goes beast mode is in its profitability stats. An exclamation point-worthy EBITDA and gross profit are giving them a winning edge. Notably, their debit situation is more toned than Yo Mama's step-counting habits with a svelte debt-to-equity ratio of 0.21, displaying their steady balance between borrowed and owned funds. But wait, there's more. Microsoft's revenue engine is revving louder than the industry average, showcasing their undeniable prowess in sales performance and overall market dominance. So folks, with Microsoft's headline-hogging antics from hefty investments in AI talent to stirring up debates about corporate valuation, where do you stand? What do you think about the giant leap into the land of curry and vindaloo and what it means for tech talent worldwide? Is it an AI fairy tale or fool's gold? Share your 2 cents in the comments below. Let's buzz over what this means for India, the software industry, and the future of Microsoft's moonshots across technological horizons. All right, fellow tech tycoons and stock strategists, let's hone in on Apple, because who doesn't love a good talk about tech giants? After dissecting today's news, where we're seeing some turbulence with Apple due to a sell downgrade and a sprinkle of geopolitical tension, the real question looms: should you sell, buy, or hold? Here's the deal. I would personally recommend holding Apple for now. Yes, the downgrade from neutral to sell by Moffett raises eyebrows, especially with some rocky stories about the iPhone 16's lack of fanfare and the current US-China tensions. Yet don't let that send you into a panic sell. Why? First, Apple has faced adversity countless times before, and if history is anything to go by, it has a knack for turning challenges into catalysts for growth. With its ecosystem as robust as ever and promising ventures into AI and VR, Apple's future still shows plenty of delightful promise. Added to this is Apple's substantial cash reserves, allowing them to maneuver through tricky situations and make strategic acquisitions if necessary. Even if market shares dip or the Google deal wavers, these aren't overnight developments, and Apple is likely to have contingency plans or pivot strategies up its sleeve. Moreover, the Apple News app boom highlights their diverse revenue streams beyond just hardware, a crucial aspect in gauging long-term survival and investor safety. All in all, while there's a fair share of clouds on the horizon, Apple's fundamentals and innovation track record still weigh heavily in its favor. I'd say keep it in your portfolio, but definitely stay vigilant and keep an eye on how these geopolitical dynamics and AI endeavors pan out. And as always, this is just my upbeat, tech-tailored take. Remember to hustle your own research, understand the nuances of your portfolio, and chat with financial advisors to find the best strategy for your individual financial landscape. Today was a whirlwind in the tech world, with visual content giants Getty and Shutterstock sealing a blockbuster merger, setting the stage for a new global image powerhouse. Meanwhile, Apple's star dimmed ever so slightly with a stock downgrade and geopolitical rumblings, yet its diverse ventures into news and AI promise a resilient future. MicroStrategy danced to the Bitcoin blues with a sharp stock sell-off, revealing just how tightly it's tied to the crypto roller coaster. Meanwhile, Microsoft made a billion-dollar tech splash in India's AI landscape, gearing up for an innovation-fueled future. And there you have it. If you found today's Tech Tales exciting, don't forget to smash that like button, subscribe, and share the love with fellow tech enthusiasts. Meet me here tomorrow for another action-packed day in tech news.